Our friends at HMRC expect over 12 million tax returns to be filed in the United Kingdom. Weirdly, of that 12 million UK tax returns that are expected, 10 million are filed on time, and that's nearly 2 million that are filed late. And that's unfortunate, by the way, because those 2 million taxpayers will incur a penalty as a consequence. Me and my team at I Hate Numbers contribute to the filing of those 12 million tax returns. We don't do all of them, but we are responsible for a good number of tax returns nevertheless. And in this video, I'm going to share with you 5 things that I come across on UK tax returns, 5 things I've come across in my experience of advising a variety of clients here about common errors, oversights, things that need to be taken on board, and things that clients may not necessarily be aware of. Hopefully, this is going to be a valuable benefit for you. One of the things that is commonly overlooked by people is the student loans they may have. Now, there are 4 types of student loans that exist in the United Kingdom, and they are, drumroll, Plan 1, a Plan 2, a Plan 4, and a postgraduate (master's) loan. There is, strangely, no Plan 3. Now, the plans are based on when the student loan was taken out. So if you took out a student loan prior to September 2012, you're under Plan 1. If you took your student loan after September 2012, then you're on Plan 2. If you reside in Scotland and you took out a student loan, you come under the category of Plan 4. And if you take out a postgraduate loan, you've taken out a postgraduate loan. You can take both, by the way, and be accessible on having a Plan 1, 2, or 4 loan, as well as a postgraduate loan. Now, the types of plan that you have, what they do, they determine when you can start paying your student loan back. And the income bands are as follows. When you're earning approximately 21,000 under Plan 1, anything over that, you start paying back your student loan. Plan 2 is about 27, 25,000 under Plan 4 for Scotland, and 21,000 is the figure for a postgraduate loan here. Check out the notes, by the way, and I'll give you a link to some more details on that, the exact details that you'll need. Now, those student loans are either deducted from your employer. So if you happen to be in PAYE, your employer will deduct those on you. If you're self-employed, or you have a combination of self-employed and PAYE, then it will be collected through your self-assessment return. If you miss that out, that's going to have an impact not only on your amount you've got to pay, but also one of the common areas here of called payments on account. More of that later on in the video. The second thing that may not necessarily come to people's fore is what's called working from home. And now there are 2 dimensions to this. If you happen to be a director of your own company, you are allowed to claim a flat rate £6 per week for using your private facilities, your office space in your home, while working as a company director. So that's worthwhile claiming, and it's worthwhile putting through. The other one is if you've had to work from home because of the impact of COVID, because of lockdown. And if that is the case and you're working for somebody else, then if you've had at least 1 day off because of lockdown restrictions, then you are eligible to claim the £6 per week for the whole year. Again, link in the show notes to further details on that. And also check out the YouTube channel where I've published a previous video on that very topic. What's the third thing? Well, the third thing is if you are self-employed, there are a whole range of flat rate expenses available to you. You can actually claim actual costs, or you can claim flat rates. Typically, these are for things like working from home, using your space in your house as an office, and the rates that you get are based on how many hours on average you're working on and in your business. The highest claim is £26 per month. So that's £312 a year. It's going to be worth looking at. Again, check the show notes and I'll give you a link to some further details on that. So we've covered 3 things. What's the 4th and the 5th thing? Well, the 4th thing that is often missed out by many taxpayers, whether they're in self-assessment or not, is what's called the high income child benefit charge. Bit of a mouthful, isn't it? In essence, this is what it refers to. If you or somebody in your relationship, your partner, have a child, and one of you is earning over £50,000 per annum, then you are subject to the high income child benefit charge. What that means is if you're claiming child benefit, then you need to declare that, and there will be some clawback on the child benefit that you paid over. The amount that's clawed back depends on the level of what's called your adjusted net income. It's also based on the number of children you have and the amount that you're claiming as well. Now, you can avoid this by not actually claiming it in the first place, but if you've actually received child benefit and either you or your partner earn over £50,000 a year, then you will have a clawback to incur. Now, strangely, if you're both earning £49,000 a year, it doesn't apply, but that's the way it cuts. The last thing, again, that catches taxpayers unaware is what's called the payment on account. And I'm going to share something really positive for you to bear in mind. Now, if your tax payable through self-assessment is more than £1,000, then automatically there's a default calculation that triggers in that says you owe money upfront going towards next year's tax bill. And typically it's going to be half of what your tax owing is in one instalment payable by January 23, and then you've got to pay the other 50% in July 23. Now remember, the default is the assumption that you have to pay upfront towards next year's tax bill, and it's called the payments on account. However, if you anticipate your income is likely to drop for a number of reasons, so typically for self-employed people who may have received the self-employed grant, there's no grant coming through for 22-23. And if you've received a self-employed grant for 21-22, and that's not going to be in the crosshairs for next year, then there is a ground for reducing your payments on account. Now, if you get it wrong, by the way, and you actually end up owing at least what you did in 21-22, then HMRC will charge you interest on the underpayment. At worst, they'll levy some penalties. In my 28 years of experience, I've only seen it occur once or twice where HMRC have levied penalties for the incorrect calculations, so it's not likely to happen. So folks, I hope you found these 5 tips, those 5 areas useful. Remember, if you have made a mistake, if you have forgotten to take these things into account, it's not too late to adjust and change your tax return. A video for another time. And until then, folks, if you're one of the 2 million people who've not yet completed their tax return, get it sorted and avoid that fine and penalty. Until next week, relax and don't worry about the tax.